before the emergence of DeepSeek, most Chinese that I've spoken to were very pessimistic about their prospects in AI. And the major reason, or maybe the only reason, was that China would not have access to the advanced AI chips. And of course, at that time, or maybe before the emergence of DeepSeek, you would need the advanced chips to run your models, even for inference work. But then, DeepSeek made a major breakthrough in large language models, where you do not need high compute power. So all of a sudden, Chinese realize that now they can compete with the US in AI, at least in AI application. And as far as I know, the Chinese government has made a decision to go all out on AI application to strengthen their manufacturing sector even more. Not just the manufacturing sector, but probably the entire nation, including the society, government institutions, education, hospitals, and so on. So I expect in the next 3 to 5 years, China, the entire nation will be much more productive and efficient, which is not reflected in the market yet.
If we are patient capital, if we believe the long-term story, the constructive story with regard to China, then how should we express that? Do we express that through BYD? Is BYD the clear winner of these megatrends and this resilience?
I think then you have to look at the promising industries of China for the next 3, 5, 10 years, or even longer. To me, I think China's future lies in the tech sectors, no longer in real estate or the low-end or low-value-add manufacturing. And those are industries of the past. And therefore, paradoxically, in this environment, it's quite straightforward when it comes to picking, sectors and companies. To us, we think that the semiconductor industry, which is a laggard, i.e. there's still a gap between China's semiconductor technology with the US, Japan, Korea, Taiwan, and so on. But it's moving very fast in terms of catching up. So we like the entire food chain, from IC chip design to fabrication, tool makers, and even packaging companies. 2, I think, is AI. Very new. And it's the area where I think China will invest heavily to make the economy more efficient. Eventually, if your economy is most productive, regardless of how hostile 1 or 2 countries may be against you, you will be able to make a living, so to speak. 3, I think, is biotech. Again, it is an area where China lags behind the West. And the Chinese, including the policymakers, know that they must encourage their biotech companies to invest in innovation. And this is already been done. This has been done for quite a number of years. So in coming years, I think we'll see a lot of success and progress from these sectors.
Kok Hoi, we have a lot of choices. When you look at the Greater China region, do we get on the southbound train? Do we look at H shares? Do we overweight A shares? Taiwan, you look at the market today in the TAIEX, there's some associated risk there. You've got the geopolitical layer. How would you position within Greater China? How should patient capital position within Greater China if we do believe the long-term story?
Firstly, China has been sold off by investors in the last few years.
That's right.
Since the real estate meltdown.
Yes.
So today, the market is very cheap, right? Even in the traditional sectors. So some of them are so much oversold that even if growth rates from here onwards are pedestrian, they're still undervalued. Whether you use the DCF model or the asset valuation approach. Maybe an investor like Warren Buffett, who studies China, will get excited. We are excited on some of the gross undervaluation. But our interest lies in the tech sector. Now, between A shares and H shares, we like the H shares because most of China's tech companies are listed in Hong Kong.
Yes.
And not in China. That's one. And two, H shares are still significantly cheaper than their A share counterparts if they are dual listings. So I think H shares should continue to outperform, in coming months and maybe coming years.